Okay, ladies and gentlemen, moving forward to a second panel, which is a very critical one that we have for you, is managing financial risk in trade. International transactions are riskier than domestic trade due to the difference in currency, culture, legislation, and even language. So, how can businesses safeguard their orders and payments? How can businesses ensure they're able to manage operations while ensuring liquidity in their businesses amid supply chain disruptions and currency fluctuations? What are the new avenues of trade financing that MSMEs can leverage? Our next panel will answer these questions and more for our audience on the subject. The first speaker to join that panel on stage is Mr. Anand Tandon, founder and CEO, Forex solutions company Myforexeye, that works with over 700 customers ranging from large corporates, SMEs, as well as individual Forex enthusiasts. Anand earlier led IndusInd Bank's North Zone operations and has also worked at ICICI Bank, McLife Financial and Commercial Services, and India Cements Capital and Finance Limited during his previous assignments. Requesting sir to please join us up on the stage. The next panelist joining us is Mr. Ashok Saigal, Managing Director and Frontier Technologies and Co-Chairman of National MSME Council at the Confederation of Indian Industry. His company, Frontier Technologies, is an SME specialized in manufacturing of heat shrink products, mainly used for insulation in electrical power distribution systems. He is an electrical engineer from IIT Kharagpur and an MBA from Harvard Business School. Next, we have with us Mr. Gaurav Anshuman, Deputy General Manager and Regional Manager of Northern Region at ECGC. Gaurav has over 2 decades of experience in the export credit insurance sector and was earlier the Chief Risk Officer of the company. Prior to his current assignment, he was heading Bank Business Branch, New Delhi. Before that, he was the Chief Risk Officer of the company at the helm of Corporate Communication Department. He has headed numerous branches throughout the country during his career. The next speaker we have is Mr. Kapil Bhatia, Executive Vice President and Head Commercial Banking at Federal Bank. Mr. Bhatia has more than 20 years of experience in trade finance, credit, and transaction banking. Earlier, he worked as Vice President and Unit Head Corporate Banking at SGFC Bank and also as Associate Director at BNP Paribas. Our fifth panelist is Mr. Vijay Kalandri, Chairman of MVIR-DC, World Trade Center, Mumbai, and President of All India Association of Industries. He's also the Founder Chairman of Infrastructure Corporation Balaji Infra Projects and holds several honorary positions such as the Honorary Consul to Uzbekistan in Mumbai, Chairman of the Honorary Consular Corps Diplomatique Mumbai, and Senior Vice Chairman of the Honorary Consular Corps Diplomatique of India. He has also been an independent member of the board of SGFC, ICICI Bank, and also an advisor on the board of SEBI, RBI, and SIDBI. The discussion will be moderated by Mr. Sushil Muhnot, Senior Advisor at Cuts International since 2016. Prior to this, Mr. Muhnot was Chairman and Managing Director of Bank of Maharashtra from 2013 to 2016, and Chairman and Managing Director of Bank of Development and Chairman and Managing Director of Small Industry Development Bank of India from 2011 till 2013. He has also been the member and chairman of several committees at bank, industry, and national level. Ladies and gentlemen, let's welcome our speakers up on the stage.
We have one thing to say that Mr. Vijay Kalandri will not be able to join us because of some last moment engagement which has come in. But yes, we'd like to begin it. And we have a very esteemed panel here on the financial risks in the international trade. And coming from the last 2 lectures or the sessions which we have had here, we find there are certain important takeaways for us which are important for this session also. Just like that, the MSME sector is quite large, gives you 30% of GDP and all. And it is also responsible for making 45% of India's exports. The growth has been there. I think there was a lot of discussion and we got some statistics on the export growth which has happened. India has done it. However, one thing which came to light was that in the last 10 months, the growth has come down, especially for the SME sector in terms of exports, while though overall exports have gone to 760, are likely to go to 760 billion USD. But the target also is there that we may go to $1 to $2 trillion by 2025, 2030. So those kind of very high targets are also there. And why the reason for this is that basically because our country needs to do more of exports. We already have a high trade deficit, which we need to work on. Then no country in the world is able to have a high GDP growth as well as a high employment rate without going in for exports in a big way. So it's very important for all of us to increase the global export share from say 1%, 1.5% to say 5% by 2030, which is the targets. But there are certain macro risks there to all these exports, which we have been discussing. I think in the last session also we had a good discussion in terms of which markets to do. Because we can see that there are a lot of recessionary conditions there in the developed world, especially US, EU onwards. And it is basically because there has been this Ukraine war, and it has come after the COVID-19 on top of it. So both the things have impacted us, all of us. Both the things have impacted the countries by raising their energy prices, which made it high inflation. And there is less disposable income to them available for other goods and services. So this is again a challenge which we need to look at in terms of which markets we are going to do. Then the other issues which have come up is that not just the need to diversify markets, as was the discussion there, whether you go into the developed markets or into the emerging markets, because emerging markets also offer you some very good opportunities. But also we need to look at diversifying our export basket. I think there is a big need to do that. We need to work on new products, new ideas, apart from the existing product lines which we have been doing very well. Something like which comes to my mind immediately is that the government is promoting defense exports. The defense sector is being done in India. Maybe, I am sure in the next few years, you will find a lot of SMEs also coming into defense exports. So those kind of things which can be there. You can have seafood exports which can be there, which are now growing faster. Apart from what we have seen that we must go into the electronics area and we must go into the auto component sector also, where we are already strong. So once we do that, and India is in a good position to diversify these markets, having signed up some free trade agreements with Australia, UAE, and in the process of signing, as we saw, that yes, it is in the process of signing with few more, including UK and all. But then, yes, we will have some advantage again here in terms of the duties which are kept there on our products. And that advantage we will get it once we start looking at those countries in a big way. So we need to work on all these areas. Now before coming to the financial risk, I would also like to discuss one important risk, which is going to be an important future business risk for the MSMEs. And that is going to be a climate change risk. I think it is a very important risk element which is coming into the picture. See, given the global warming, we all know about it, and there is a need to step it down. And also all the countries, almost all the nations have pledged net zero emissions by various times, like 2030, 50, 70. So all this has been there, and there the important thing is that it will get implemented now. I think there will be a lot of acceleration in the implementation of all these things to achieve net zero by all the countries. So what will happen? Because of that, there will be a big change. There will be a transformation of the global value chains and global supply chains. Because you will have new technology, you will have new product market configurations, and we need to prepare for that. That is the main thing. The composition of the world trade will change, so you need to be ready for it in order to be able to make this risk into an opportunity. I think there India needs to work on in an important way. This risk also has transformed into a specific risk, something like the European Union cross-border adjustment mechanism. Now here, there will be Indian products, several of the Indian products are likely to be taxed in the EU shortly, maybe from the next year onwards. Reason? Because the European Union is implementing tough emission standards, and so because of that, the production costs of the local industry is going to go up. And in order to nullify that cost disadvantage, they are going to put up taxes on products being imported from countries which have a relatively lax or relaxed environmental standards. So we need to be careful of those things also can we convert it into an opportunity now? See, these are the risks which are there, but every risk can be converted into opportunity. How do we convert it? I think there was one very important thing which we found was that the Indian SME sector, there was a survey of the Indian SME sector in India as well as across all the 7-8 Southeast Asian nations. And it was found that this was done by Bloomberg and Development Bank of Singapore. And it was found that the highest number of MSMEs from India, that is 92% of Indian MSMEs, were putting in ESG as an important part on their agenda. Were very important on the agenda. ESG, as we know all, means is environment, social and governance. And this environment part which we are talking of is also going to come here. And it becomes even more important, especially when all the large Fortune 500 companies, almost all of them today, they have committed to going to net zero by say 2030 or a little later than that. And what does that mean for us? It means that they are going to minimize their scope 3 emissions, which are going to be the emissions in the supply chain. So if India has to be a part of the global supply chain, if India has to take advantage of the China plus one policy of many MNCs, then we need to be looking at environmental consciousness or following those international standards. So we have to be maybe trying to go for ESG compliance. And at CUTS International, we are working on trying to find out a framework, a specific framework for ESG for the MSME sector. Because right now it is available for the large corporates, the 1,000 large corporates today already SEBI said that they should give this thing. But now it should be there for the MSME sector. So once we have, and I think there's a need to provide support to the MSME sector in terms of getting this framework right and getting the implementation of this framework so that we can be a part of the global value chains in the future. Well, I think since now we can move to the financial risks, we have such a strong panel which has helped me in terms of talking about the other business risks. So I would now like to first invite Shri Anand, Tandon, founder and CEO, Myforexeye, Fintech, because he'll be able to tell us much more on risk management in terms of foreign currencies as well as financing of the foreign trade. So over to you, Mr. Tandon. His details and his biodata has already been given out to you. So Mr. Tandon, please.
Thank you so much. Good afternoon, everyone. Anybody who's looking to export, foreign exchange is inevitable. So you are going to earn foreign exchange, and over the last few years, what you would have seen is the incidence of volatility in the foreign currency market has been increasing sharply. So from about 65 rupees in 2014 to 83, 84 rupees today, the currency has devalued. It has depreciated quite a lot. While it is in your favor, but at a time when you are booking contracts with your buyers, foreign exchange volatility is something which aches everybody in the value system. So there are basically three components which an exporter should be very carefully monitoring at a time when they are dealing into the currency markets. One is the conversion cost. So at a time when you are receiving those dollars into your account, so you have to be very, very hawk-eyed at what rate my currency is getting converted. So there are a lot of slippages you might witness at a time when you are seeing that minutely as to what exchange rate is being applied to my currency which I am receiving into my bank. And this is something which can give you immediate profitability into your account if at all you are able to curb that slippage. Second is foreign exchange per se has now got coupled with borrowing. So at a time when an exporter, a MSME exporter is going into the market and executing those export orders, he has to be very careful at looking at his financing options. Being an MSME, you are eligible for interest subvention under the interest equalization scheme. And you are also being marketed or being availed of the foreign currency loans which are being provided by banks in the form of packing credit in foreign currency, which is PCFC. So a MSME has to evaluate for each and every order which they are executing, what is the best currency in which I should be borrowing? Is it the foreign currency, the currency of my exports, or it is the domestic currency? A strong evaluation has to be made so that you can bring down your cost of borrowing. A very simple example, a MSME gets a 3% subvention under the current scheme. So even if your borrowing cost in INR is about, say, 9%, and you get a 3% subvention, so your net cost to you comes out to be about 6%. When you go to your bank to avail a packing credit in foreign currency, it will look identical. You will have a dollar financing cost coming to you at around 6.5, 7% itself, right? So you have to evaluate at different points of time, since the markets are very dynamic, you have to evaluate what is my financing option. On the face of it, both of them look identical. You have a foreign currency loan available to you at 6%, whereas you have a INR loan after the subsidy, it is available to you at 6%. But there is a huge difference. In packing credit in foreign currency, you sell your dollars or you sell your foreign currency the day you avail that loan. So your liability towards the bank is to pay off those foreign currencies at a time when you're going to receive your remittance. So you have sold dollars on that particular day itself. Whereas when you are availing foreign packing credit in INR, you are going to tender the dollar at a future date. You have just availed INR credit from the bank, and you have to settle that credit by way of conversion of your foreign currency into INR. Now, when an exporter sells foreign exchange in the forward market, when you hedge yourself in the forward market, you receive a premium. By virtue of your currency, which is INR, being a high interest cost currency, you receive a premium. That premium ranges between 2% to 5%, depending upon different currencies. So that is something which you are losing on the table itself at a time when you are availing a foreign currency loan denominated packing credit. So the evaluation has to be made very carefully. The mathematics, the arithmetic around it should be carefully thought through. And the third part of managing the foreign currency is the exchange rate volatility. So anybody who would have exported in euros or in pound over the last 10 months, he would have seen euro going down from 100 rupees to 90, 85, 86 rupees, and back to 100 back again. So how do you manage this kind of a volatility in the market? So you have tools available today. The government is working very hard in terms of making these tools available to you. You can go and hedge yourself with your particular bank who has funded you for your export. Or even if you have a current account over there, you can go and take the hedging facility from the bank. In case the bank is not very forthcoming in giving you that hedging facility, if you are just a current account holder, then NSE provides you a platform to manage your currency risk. So these are the three areas in which any exporter, wannabe exporter, is looking to really venture into the global markets. He has to be very careful of currency markets. So we are providing a platform wherein when you go to your bank, you go and convert your currency. You would see some customers are losing about 50 paisa, some customers are losing around 1.5 to 2 rupees if the currency is, say, euro or pound. So you have to find a platform which provides you real-time data, real-time intelligence in the currency market. So that is something which I have been trying to solve over the last 8-9 years, and we have been successful as far as the penetration goes. Over 32,000 companies today use our mobile application, wherein you can have the entire India-centric currency information on a single platform.
I just wanted to ask you one more question. Suppose if somebody is exporting to the EU in terms of euro currency, and he wants to have a forward cover, whether he should go for in euros or whether he should take it up in dollars, or he should take up a loan in dollars or euro, whichever way you suggest.
So euro is a very interesting currency. If you look at the forward premiums available in on euro exports, it is close to about 4.5%. So the mathematics around it is that you borrow from the bank at 9% back in credit, you take 3% subvention from the government, which brings it down to 6%, and you have a 4.5% on the day you receive the order. You go and forward sell your currency, right? You receive 4.5% annualized premium. So your net cost of borrowings come down to about 1.5%.
I think that will be good. And I'll now maybe request Mr. Saigal, Mr. Ashok Saigal, MD from Frontier Technologies. He is also the co-chairman of the CIA National MSME Council, and he is also a very major exporter also, and especially to the European Union countries also as well. So he will be able to provide you good tips on exactly what he does, how it is done, and what should be the exporters do, what they should avoid. Some do's and don'ts will also be there. He may give you some anecdotes about himself also, what he has been taking up, what he has found with customers who have been there with him since very long time, how he is trying to work up and financing in those customers. So over to you, Mr. Saigal, please.
Thank you for the introduction, Mr. Muhnot. As he has mentioned, I'm not a financial expert. I'm not a banker. I don't delve into foreign exchange as my principal business. I'm a manufacturer running a small-scale unit, making some specialized products. And a significant part of our business is in exports to Europe principally, but also to Africa, and in the past we exported to Brazil and the US and Canada. So I'll give you more of a practical approach to what we see when we talk of managing a risk in export trade. I think the risks which Mr. Anand has talked about are what I would call transactional risks in the amount you would end up earning. To my mind, as a business person, whether I'm doing business in India or globally, the bigger risk is that will I get my money? Okay. Second is, what will be the cost of getting that money? Which is the interest cost I will pay? Will I have to pay some middleman? What my bank charges? What might be a currency fluctuation? To my mind, the first risk anybody should consider in doing business, more so globally, where, as has been pointed out, we're talking about countries and people with whom we may not have a day-to-day or a very close understanding, is the reliability of the person to whom you're exporting and the certainty that he will pay you for the goods which he has placed an order on you. It is the same thing as doing his business in India. There are some customers you know will never pay on time. There are some customers you know will always pay on time. Some of the better corporate houses, well-known names in India. You do business with them, you're sure that if you supply them what you have agreed to supply, you will get paid. If there is a discrepancy in your billing, if there is a problem which you had, they will understand and they will accommodate that. The same thing holds for global businesses. In international business, there is a feeling that if you have a letter of credit, you're very safe. Now, my experience is that letters of credit are not that safe, and we have some bankers who will further comment on whether they agree with me or disagree with me. But letters of credit are only safe to the extent that you can tomorrow use them as a basis for going into litigation if you don't get paid. Let's be honest about that. Just like if a local domestic supplier does not pay you, you can go into litigation. Because when you present documents against a letter of credit, 99% chances are that you as a business person would not be so familiar with every nuance in that letter of credit. You'll miss out a full stop or a comma or a particular phrase in there, and your letter of credit application will not be accepted by the bank through whom it is being negotiated. He will, to play safe, which is fair enough, that is his interest in playing safe, he will refer it back to the bank which has opened it, who in turn will refer it back to the buyer. And then you're at the mercy of the buyer on whether he accepts those discrepancies or he doesn't. It is my experience, because initially we were doing business on letters of credit, that it was rare to find an instance, especially when you had a new end customer in a new location, that there was no discrepancy. That means that the letter of credit was again at the mercy of the person who had opened it.
Are you talking about irrevocable letter of credit?
I'm talking about all letters of credit, any letter of credit, whether it is confirmed, it is not confirmed by an Indian bank, a foreign bank, third country bank. If there is a discrepancy, the bank will play safe, which is in its own interest to do so, and that is fair enough. One must not deny them the right to protect their own interest. So, somewhere if you're messed up, that is something to be careful about. And then I come back to my point that you must know your customer. He must be somebody you understand how he works, how he thinks, what is your relationship with him, what is his relationship with you. If you have a long-term relationship, and after a few years with some of our customers who've been with us for almost 20 years now, after 2 years or 3 years, we dispense with the letter of credit when we go on open credit terms, and we present the documents to them through the bank, and we get paid. And there, if there's any discrepancy, we talk to them on the phone, we exchange mails, whatever it is, and the matter gets sorted out. Now, for example, in a letter of credit, if tomorrow your ship sailing gets delayed because the ship doesn't have capacity to take your shipment on board, you miss the date, there is nothing you can do about it as far as the letter of credit is concerned. You're back at the mercy of the buyer. So this is the kind of risk which you must recognize and therefore base your transaction based on whether you will get paid or not. And I say that is point number one. Point number two is, what will you realize out of it? Will there be a currency fluctuation which will reduce your margin? Will there be additional costs which will come in, which may again reduce your margin? So that is something which, even in any domestic business, you have to be careful of. The commodity prices, your raw material prices may go up. Can you predict it? Maybe to some degree you can, because you know the Indian market. But talking about another country, what will happen to their currency? You don't know. Another risk which I would mention is that we find it convenient to always think that we will quote in US dollars and we'll transact in US dollars. But let's realize that transacting in US dollars is neither your currency and in many cases may not be the buyer's currency. So again, there is a transactional risk between Indian rupee and US dollar and the buyer's currency. Now, maybe your one contract which you've done may work out the way you thought, but the risk is that that may be something which is not repeatable and not something which will happen again in the future, because after all, your buyer is looking, as it was mentioned in the last session of panel discussions, he's looking to buy value, which includes, unfortunately, the price amongst quality and other things that were mentioned. If the price goes against you, you have to be sensitive to that and you have to be open to realizing that you may need to renegotiate that. So when you enter into an international contract, and many international companies are one of our buyers in Europe, for instance, buys our component and then offers it to his customers with a fixed price agreement for 1 year. So naturally he wants that from us and we back him up on that. But what happens during the year? If he finds it buying more expensive from India, he has alternative sources. Nobody has only one buyer. Like Mr. Vinod Sharma mentioned, we are not competing only amongst Indian buyers, we are competing with the Chinese buyer. If the Chinese buyer undercuts you, you're out. So be prepared to put in some variability in whatever contract you sign for a long-term deal. Also, looking at all the uncertainties, look at the possibility of indexation of your quote. You can index it to raw materials. Let's say in case of metal dealing with the LME price, you can index it to exchange rates or whatever else you choose. But keep that option of flexibility. Don't get into a rigid contract, because with the volatility going around globally, to commit something for 1 year, whether domestically or internationally, is very, very difficult. So these are some of the risks I would highlight, that don't only look at the risks of the cost of the transaction and how much you'll end up earning. Think of where you're securing your principal. And when I talk of, in other MSME forums, we often talk of MSMEs borrowing money, and the focus comes on what is the cost of borrowing. But if you talk to MSMEs, I think they will tell you that we want to get the money when we need it. We are prepared to pay that 0.5%, 1%, 2% extra. Very important for people whose business is finance, like the bankers. But for somebody whose business is manufacturing or services, doing that business is more important than that 0.5%, 1%. We will absorb that and adjust for it and take care of it as we go along. So focus on securing your principal amount. Make sure you have a cushion for any variation in cost which will come up. And most importantly, have a close relationship with your buyer and a close understanding of his situation, so that it can be a long-term business and not just a 1 or 2 time business. So that's what principal points I'd make. Thank you.
Thank you. Thank you very much for giving us your personal features of thinking, especially on the various problems which you have faced in terms of exports. One of the things which you said was, will I get my money back? What is the cost of it? And then there are several other risks also associated with trade. So we have someone here who has going to answer us all our queries in that regard, in terms of what kind of insurances can be there, what kind of financing mechanisms can be there. So we have Mr. Gaurav Anshuman from ECGC. So I now request him to allay these kind of fears and what people can do and the SMEs can do to overcome these kind of hurdles in the journey of exports.
Taking directly from Mr. Saigal, who has made my task easy. And that is the practical thing that he has explained, that you are aware that he himself is an exporter. And the basic problems that he talked about, that whether you will get your money back, letter of credit. So these are really the practical problems and the risk. Whenever you are starting into a business, risks are inherent part of your business. You cannot remove risk entirely. So there is a saying that risk and business goes side by side. But that doesn't mean that we should not do business. We have to do business. We have to be in business. And then what about the risk? Yeah, risk will be there, and that has to be mitigated. No one can remove the risk in totality, but it can be mitigated to a larger extent. What Mr. Saigal was saying, that the payment risk and whether your buyer will make the payment, your shipments, whatever you have made with whatever transaction cost, everything will decided, and at the end of the day, if money comes, then you are earning profit. If it is not coming, it's a total failure. And failure of not only one transaction, but it will be ruining your working capital, and then in turn, your business will derailed. At this stage and at this juncture, I would like to first introduce my company. I am from ECGC Limited. ECGC is a Government of India owned credit insurance company. Basically, we are export credit agency of the country, but our roles are more similar to insurance. That's why we were asked to get registered with IRDAI, which we are. We are working under the administrative control of Ministry of Commerce. So initially when ECGC was established, it is basically export promotion organization, and we are working towards that. So the risks that sir was saying, Mr. Saigal was saying, if your buyer is going to make payment or not, these are the risks which ECGC provides to the exporters. You have made a shipment. Before making a shipment, you have to check the buyer, you have to get a report on the buyer, you have to manage that if you are doing business from India, it may not be possible for you to go and visit your overseas buyers, all the buyers, and even if you are going, you may not be able to get their financial position, you may not be able to get whether what is the behavior of the buyer. बाहर से तो सब कुछ अच्छी लगती है. There will be a nice showroom, and tea, coffee, everything will be offered. And that is one basic problem with we Indians, that we are more emotional. Buyer ने अगर चाय पिला दिया, coffee पिला दिया, so we feel that the buyer is our own people. But in a business, you all know, and Mr. Saigal will vouch to me, कि in business, relation is with profitability. As long as I am getting profit out of my business, I will honor whatever. Same thing happens with the letter of credit also. As long as your buyer is having business interest in the transaction, whatever discrepancies that comes, it will be waived off and your payment will come. But the moment your buyer realizes that there is about to some loss for the buyer, whatever intelligence you have applied while preparing the documents, discrepancies are bound to come. So from here, I am trying to say that in ECGC, what exactly we do is, we have a variety of products where we do provide credit insurance for your payment risk on the overseas buyers. So any exporter who is entering into the business, they will be exposed to certain risks. There are a number of risks, but majorly there are 5 risks that one will face. One is, as sir said, legislation risk. Law of India will not be applicable to law in US. So law of land is one issue. And taking legal route is not that much easy. Losing a good money for a bad risk is again not a very advisable thing. And again, even if you file a suit in a foreign country, and with your great efforts and money, you get decree in your favor, but again, execution will be a problem. So that legal risk will be always there. Second is, yes, that the transaction risk. That the shipment en route, whatever risks are there, that is there. Payment risk is once the goods have reached to the port, there will be two situations. Either your buyer will be taking the goods or they may not be taking the goods. If goods have not been taken by the importer, again, even though the title will be with the Indian exporters, it may not be viable for you to, or you are trying to bring it back or reselling it, it will incur some additional cost. And all these costs, additional costs will be a loss for you. And it may so happen that you may not get any alternate buyer for selling the goods. And again, you will say that in bringing goods also, that NOC from the buyer will be required because as per maritime law, the consignee has to give NOC before taking back the cargo. And if all this risk, what ECGC does, if you are with ECGC, we not only provide the payment risk from your buyer, which will be for both the risk. If buyer has taken delivery of the goods and on due date he has failed, or buyer went insolvency, or he has repudiated the risk by not accepting the goods or honoring the document, goods are still lying at the port. These all risks are well covered by ECGC. Litigation part also, partly we can, in a way, I'm not saying that we provide litigation risk, but we have tie-ups with many debt collection agencies all over the world who works on successful fee basis. So these two aspects are very important, and not only this, ECGC role is also important when you are going to avail bank finance. We, as a facilitator role, we provide backup to Indian banking system and encourage them to lend more and more to exports. So this is again government priority sector lending, ECGC being a government company, it is our duty and it is our role to promote export from the country. Then question comes, then ECGC cover why it is not that much, exporters feels that, many times exporter feel ECGC premium is extra burden. Yes, it may be extra burden if you are not including into your cost to invoice. If you are including this insurance premium into your pricing, then it may not be. But as Mr. Saigal was saying, at the end of the day, your this hedging and other things, these are basically not making you loss. It is in fact your profitability is coming down in a way psychologically. Why psychologically I am saying? The day you finalize your contract, you are aware about the price. You are aware about the cost. So if you take this, it may not be that hurdle. But it is a mental thinking that hedging price has come down, dollar has gone up, euro has come down. These all will have. And if tools are available, we should work on that also. So ECGC, again I will say that one more topic will be there related to me, I suppose, when it comes to factoring. But I am not talking about the factoring. I will take you again on the credit insurance. So this credit insurance is one of the best tool to have soundness in your mind. And if you see our tagline, you focus on export, we cover the risk.
Excellent, excellent. I think that you have given us very well. See, all the kind of risks which are there in this business. Now, ECGC is trying to mitigate those risks, and he is also trying to tell you that you know at the date of contract what is your price. So why not take it up then itself and don't think of possible gains and possible losses in the future. Okay, then there are some other things, important other things will be in terms that we have found there is a financing issues are there involved. which has been talked over by Mr. Tandon also. Then there are issues of hedging, which he has said we should be doing. Then there are transaction risks and transaction issues are there. So all these matters, and we need to go through with a bank. And so we have the right, let us hear from the horse's mouth, the banker, Mr. Kapil Bhatia, EVP and Head Commercial Banking, Federal Bank, who has a lot of experience in this segment, and he can tell us how you should be able to deal with the bankers. I am sure he can also throw us light on, especially about the LCs, what is happening, whether if there is any discrepancy, then what happens, what does the bank do, or how is the bank going to help you in terms of all your export transactions or export business. Over to you, Mr. Mr. Kapil Bhatia.
Yeah, hi. In fact, first of all, let me tell Ashok ji, every word you told is words in gold. So I think this, you speak from your experience, and this is very, very important. I think he almost covered everything what an exporter needs to do while exporting. Even Anand told you very, very, in fact, practical nuances where many a time we miss, and how can we save on cost. We talked about many things. In fact, he told about know your customer. I think it's not only applicable for banks. We are a financing industry. We basically finance. We finance MSME, we finance large corporates, we finance retail. It's not only equally applicable for us, equally applicable for you. So you really need to know your customer. That is, I think, very, very important. And once you know that, half your job is over. Then at least you know that when you would be supplying, you know who is buying, what purpose he is buying it, and obviously I'm going to get my payment, in fact, on time. Regarding LCs, we talked a lot about LC, and he very correctly mentioned that LC doesn't mean, in fact, 100% security of your money coming in. And he very rightly mentioned that many times there are discrepancies. How do we do that? And how do we remove that? See, this is precisely where your bankers comes in. And my request to all of you would be is that whenever, and specifically for the MSMEs, those who are going into exports newly or to new territories, sit with your banker. If you are getting an LC, at the time of receiving LC itself, please discuss with them. There are trade expertise which lies with them. They can tell you which clauses to accept, which clauses to basically, in fact, ask for amendment. Because there are certain clauses you may not be able to, in fact, fulfill. If you are unable to fulfill a particular clause which is there in LC, whatever document you are sending, that becomes discrepant. If it becomes discrepant, obviously, in fact, being a banker here, I would be needing an acceptance from the bank who has issued the LC. And when will they give acceptance? They will also give acceptance after speaking with the importer. Okay, I have got this document. There is a discrepancy. What should I do? And once that acceptance comes, they will deliver the document. But then again, remember one thing. Even if there is a discrepancy, unless and until the situation is like this, that the prices itself got crashed, and for that importer it doesn't make sense to import that commodity, or he doesn't want it, then probably he may say, okay, boss, he may find reason at that time not to pay you. But if you have done your know your customer right, and if he wants that particular commodity, at best he'll come to bank and tell, accept it. And once the bank has accepted, then they're obligated to pay on due date. I'm talking about usance LCs. And there are site LCs also, I'm sure all of you would be knowing, wherein once you send the documents would be delivered against payment. So this is all about LCs. There are many other products. SBLC is there. SBLC is very prevalent in US. They don't talk about guarantees. They talk about SBLCs. So they take those SBLC. It's akin to guarantee. Many a times, basically, it's a better instrument even than an LC, what you can accept. Because there are not many, in fact, the performance obligations related to that. It simply states that if you do not get your payment on due date, I'll pay you. So you'll have to, in fact, see the premium which is attached to it. And as, in fact, Mr. Gaurav was telling, that ECGC, yes, there is a premium. There is no doubt about it, there is a premium. For insurance also, there is a premium. And it's an insurance. So that's the reason we say that never mix your investment with insurance. Insurance should be term insurance, which should be covering you. And second thing, all of you basically, in fact, are making, you are real economy. You're making something. You're doing something for the country. You're giving employment. More important thing is that when you export, you should be protecting your budgeted rate. So I'm coming to what Anand told. You should be protecting your budgeted rate. I think that is more important for you. You are not here to make money from treasury. That's a secondary activity. Your activity is you are manufacturing something. You are providing some sort of service. So you should know that when and how should I protect my budgeted rate. I think that is something which is very, very important. And if you do that, mind you, I am telling 99% of the time you would be able to protect your profits. That would be the case. And banks helps in various ways, as Anand also told, in terms of foreign currency loans which we give you. We give you PCFC, we give you EBRD, post-shipment financing, pre-shipment financing. And similarly, we give you, in fact, a financing in INR also. This can again be pre-shipment financing, post-shipment financing. You also will CC facility, OD facility from your bankers. And you need to know, even we were talking about interest equalization scheme. Interest equalization scheme is applicable for certain HS codes which are being defined in that particular circular. So you need to know first thing whether that is applicable for you. And as he rightly mentioned, you need to know that which sort of finance is more appropriate for you, be it in INR or be it in foreign currency, depending upon what is the forward premium prevailing at that time, depending upon what is the interest you are getting in INR, and depending upon where the SOFR is moving. Now the SOFR itself is more than 5% for 6 months. So all these things are very, very critical for an exporter to know at the time of exporting which sort of financing I should be availing, what is the tenure for which I should be availing, and in LCs also there are various mechanisms. Now we call a UPass LC, wherein your buyer wants some sort of credit and you are not willing to provide credit. You said that I want it immediately and he said, no, I need credit. What is the via media? So probably an LC can be opened wherein you are allowed to get it negotiated or take payment immediately and that guy gets credit. So all these things are possible. Only thing is that your banker, you have to sit across with them, and mind you, nowadays bankers are more advisors, basically because they know that we are service industry. We are not the real economy. We can serve you basically to provide that product better to your client so that we earn that foreign exchange which our country needs. And all of us know that we are still trade deficit country basically. In fact, we have that trade account deficit is still there and it's increasing. This year it has gone up significantly. So we need to shore up our export. There are challenges. I think Sushil has very rightly mentioned that in US, in Europe, in fact, there are recessionary conditions which are there. I'm seeing across the industries. Even in China, I'm talking about basically, you talk about marine. I don't know whether any marine exporter is here or not. Even when you are shipping, they are renegotiating the rate after that. They're not even taking shipment. Licenses are not getting renewed. So this is another problem. And this is precisely where ECGC may help you in terms of buyer's file policy. So if you have that, probably you are protected. You can go and claim the money from them. So all these things I think you should be aware of. I think I have covered everything. Probably we would like to take some questions. I think that would be better. So that
very well, very well. But I'm very happy that Kapil is giving us almost all the dope on what a banker can do. And the important thing which you have to remember is you must discuss with your banker as soon as you receive your LC. This is the most important thing. You can discuss all the clauses because there is no one else. And his one good line which he has given immediately is bankers are also good advisors. Being a banker myself, so I would say that yes, that is the motto which banks are following today. So we must use that. And not only that, we must not try to make money from forex trading or from fluctuations in forex, but we must try to concentrate on our business and the profit made from the manufacturing and export of the activity rather than on a financial side and try to take up that and then say that, look, I am affected and because of this has been the problem. Please take up your, cover your risk right at the time when you have made your contract. I think that is what is going to be the complete message from all of us here, and we'll be willing to take up a few questions.
My question is, various retailers are, in today's scenario, various retailers are going to bankrupt. And when a situation can arise, then I agree with Saigal sir too, that when we enter into the business, there is various factors of the losses. And if a company bankrupt, then ECGC is also some extent work, but not finally.
Get your question, sir.
Couldn't get very clear.
You couldn't get. Just saying that ECGC give us some kind of extent relief, but not 100%. That's what I want to say.
So coming to your question.
Yeah.
See, first thing, as far as insolvency is concerned, the word insolvency was not that much popular if you ask 2 years back. In my 24 years of career in ECGC, I heard hardly few times the word insolvency. But after COVID, this word is very common. You name all the top brands in fashion industry. JCPenney, Lucky, they all went for bankruptcy. जिनके बारे में कोई सोच भी नहीं सकता था. He's such a big buyer. And no one could have imagined that your peer one, again, a big name in handicrafts, and you will, as far as ECGC is concerned, yes, we do provide cover for insolvency also. We have paid maximum claims to all these fashion failures, JCPenney, Lucky, Pier 1. So last year, entire our workforce, energy, claim payment had gone to settle the claims for bankruptcy. In a way, we also learned a lot. Almost all claims have been settled. And as far as 100% point is concerned, again, I will say 100% of invoice value is also having your profitability. And profit should not be insured. Our cover is co-insurance. We want to have some stake of the exporters so that they can take recovery action. So our normal cover is 80 to 90%, and that is well justified.
I think our time is up. So maybe we can discuss the questions at the lunch time. And I'll only say while closing that the only one message which you have a very strong message is, please treat bankers and insurance providers as your friends and advisors in your journey towards export markets. Thank you. Thank you.